Hello everyone, and welcome to the PivotBoss Monthly Outlook for April 2018. Today is Monday, April 2nd, 2018. I am Frank Ochoa, aka PivotBoss. Welcome to today's webinar and stock picking session. I'm looking forward to getting started here today, but really quickly, just as a recap, if you're not familiar with my work, you can go to pivotboss.com here and learn a little bit more about what we do here, pivotboss.com. Also, there's a list here that you may want to take a look at, Swing Trade Pro 2.0. I can talk a little bit more about that, but this is, you can get on the list here for the latest news for Swing Trade Pro 2.0. This will be a new addition to the original, and it's going to be fantastic. So there's going to be news on this here in the next week or so regarding the next version, which is going to be very, very powerful. You're definitely going to want to be a part of that and know what's going on with that one, because it's going to be fantastic. If you come down here a little bit, you can see down to the bottom About Us section here. You can look a little bit at my profile, my experience, and some of the market specialties I have in terms of how I approach the market. For the most part, my background comes from being hired into the trading room at a company that built a software company that built platforms and still builds platforms for traders. And in this trading room, our job was to create profitable automated strategies and to deploy those strategies on the market. And I got a ton of experience there. We built some powerful algorithms and automated strategies and built some great tools and platforms for traders. And in that process, I was able to really discover my approach to how I like to engage a market, an approach that uses price and volume and value in order to make great trading opportunities, or at least find trading ideas in the market and then position yourself accordingly. So if you come through here, there's a lot in the site that you can really look at. Again, great testimonials here. We have a trading room with our premium membership. So if you come right here to training, you can see premium trading room, and it'll take you right to our trial offer page. It's 19 bucks for a 2-week trial, and then you can see the rest of the price points. But a lot of great trades that come out of this room in terms of our trading from 8 to 11 in terms of the trading room. Just a great group of folks that are in that room, and we're constantly on top of the market on the major swings that the market offers. Like the one today, we were on top of that. So let's go ahead and get to the charts real quick here. So I'm going to drop this down. I'm going to start off with crude oil. This is perhaps the first one we talked about today in our trading room and also in the pre-market report. So if you have followed my work here, you know I have a PivotBoss TV is my YouTube channel there. I provide a pre-market report that's free every morning so that everybody can get started on the right foot with what I'm looking at. And what I was looking at here this morning with crude oil was the fact that we're at the top end of our key range right now. And so we knew last week that heading into today's session, that today was going to be the first trading day of the week, the first trading day of the new month, and the first trading day of the new quarter. So I kept getting our traders on the right side here saying, hey, I think we could really start next week explosively. I think we could it'll probably be a move that could trigger the next 2 to 3 months of movement. Not to say we're going to see major expansion, but it could be a move that is kind of like a catalyst that sparks additional waves of volatility over the next several weeks or maybe even a couple of months. And the idea here was that since we were at the upper end of the range, we had already rejected and pulled back to our target. Our last week's target was 63.72. I think the low of the week was 63.72. Yep, 63.72. That was our target last week for crude oil. It hit it as a low and bounced into Friday. And what I mentioned to, in not only to our trading room but also in the free video, is that on the bounce here, last time we got a failed new high. It couldn't get beyond that high, and that is what sparked the weak hands to give up and run the stops below the prior pivot low, and that's triggered an impulse sell-off move to the low of 58.07. So This is the same type of thing I mentioned could happen again. On this bounce, I mentioned that we're going to be looking for signs of a rejection up here that could lead to price pushing back to 62.18 and perhaps even as low as 60.12 here, which is the lower 25% key level. So today was a significant day in terms of selling pressure, but it all started off with a failed new high. If there's only one thing you get from my analysis and using it in your work, is to look for failed range expansion. Use it in your work. Failed range expansion. Price was above the previous highs. The 2-day highs right here, Friday's high. Price was sitting above that high in overnight and pre-market trading. And then all of a sudden some selling pressure entered the market. And then from there, price came back and more selling pressure until finally just before the open it sold off. And that triggered a full-on continuation. You see that little dot right there? That's the midpoint between these two extremes. So it's the midpoint of today's range. Look at how it's positioned right at the previous session's low. You see that right there? That is significant because that is literally what I call a stop run day. It's where price pushes through a level of support where the stops are. The stops come out, and that level becomes the midpoint. And it becomes kind of a what I call a 50% stop run day. Half the days above that level and half the days below that level. And when you can identify those levels early on in a day and understand that what might be happening is a stop run day, those are some of the most powerful days, because these are the days that if you quantify it, if you get down here and quantify this day, I use my PivotBoss Advanced ADR indicator. Let's go down here and put it to 1 day. If we look at a 1-day look back, now the data down here is going to reflect today's range and data information. So today's range was 2.47 points. You can kind of see it right there. 2.47 points. That is 148% of average range. So on a daily range basis, it's been averaging $1.66 over the last 10 sessions and $1.66 over the last 5 sessions. You rarely see that be so close, but it is. Today was 247. That tells you obviously today was a big day. And you can see that it's blue. This data point right here is blue because it is way outside of the norm, and that highlights that as being a significant day in the market. Typically these types of days can be at major turning points in the chart. So if you look, for example, back here, you know, it was basically the low. Over here, this was a stop run day. You know, these are major points. This right here was a failed new low and then a stop run the other way. So these are major points in the chart. So being able to quantify that gives you objective data to work from. So a nice stop run right here, a nice sell-off, and a continuation. This one, again, as I mentioned, pre-market, I think has a great shot to get back to 62.18 and then likely even push all the way back to 60.12, which is this lower support, and it's also the lower 25% level. Can we get all the way to the lower edge of 58.07? We certainly can. I don't want to overshoot this. Based off of the current high of the month, that high, we can use average monthly range and project it lower. And 61.12 is our primary target, and 59.68, which would be about right here, I'm just eyeballing it, that would be our primary target zone to the downside based on average monthly range. So we have some good downside. So in order to visualize that, we can just flip this indicator. Let me flip this green indicator and make it bare. Click OK. And now you can see from that high, it now gives us our target zone, the one we just talked about, 59.68 to 61.12. And that would be the zone that we're shooting for. If this thing were to fulfill its full potential here this month, it would be to reach that lower edge. We don't have to, but we certainly could. And again, whenever you start like this with a hot day like this to start the month, big range, big sell-off, it can be a significant catalyst here. So here's what we're looking for the next day. Anytime you have a big day like this, the next day tends to be a smaller range day. It tends to be a digestion day. Now, here's the caveat. If price rejects this low early tomorrow, that could spark kind of a run back toward the midpoint. And from here down, or from down here up, that's a wide move. It takes you all the way back to 64.19. So to reject today's low below 63s and to take this back to 64.19 tomorrow, that would be your counter trend fade opportunity. That's a 1 day, 1 warning trade that can tend to happen. Now the other part of this is that when price does bounce, the bears who have controlled this move will come in to defend yet again and try to push this thing downwards. So if you do happen to take that counter trend fade trade, you have to be very careful, very disciplined, look to take that move and look to take what you're given. Otherwise, you know, after rejection up here, this thing could be headed right back down, because the primary trend right now, or primary move, is currently down after rejection at the 66.29s. So there's a little bit about crude oil right now. In terms of trade ideas, again, I think any bounce will be seen as a selling opportunity over the next couple of days. So a bounce to tomorrow or Wednesday could be seen as a selling opportunity that stretches this thing to 62.18 by Thursday, Friday. That's just over the course of the week, and over the next 2 to 3 weeks, 3 weeks perhaps we can be into 60.12. So those are a couple of durations there. Everybody's different. Some folks like to trade a 3 to 5 day trade, or maybe a 5 to 7 day trade. Some may like a 2 to 3 week trade, and so you have all the different targets that you could play to. But for the most part, 62.18, 60.12, high probability targets here on the downswing, as long as price continues to hold below 64.19. Once price closes or pushes back above that zone, it kind of starts to break that pattern. So just keep that in mind. But overall, the idea, the goal, as always, you have a trading range right here. It's to fade the edges of the range as it continues to build that D-shaped profile. Right? Value areas somewhere in here. Second and third standard deviations are out here. That's the best areas to sell. Best areas to buy are somewhere down here, maybe even here. And value is always the middle of the zone right there. Right? You just return that thing to value as a high probability trade and trail to the opposite end. So this might be on its way back down unless price can pop back above that 64.19. So a nice lengthy look at crude oil there. Here's a look at the ES. This one had a significant sell-off today. Again, what I mentioned in the pre-market report and to our room this morning is that we've had quite a bit of selling pressure here. 1, 2, 3 weeks worth of downtrending price action here. We started basically looking for signs that any bounce could be a selling pressure, could lead to selling pressure. So I mentioned pre-market report that any move into that 69 or 70 could be a great sell down. We barely made it above the previous month's close before this thing really started to drop. Right here we started a stop run day. We estimated in the room that we could get as low as 25.38 based off of that, and we got down into 52s. And this was still when price was, you know, still at 95, 26.05, you know, and it still had some room to run. So a nice move. But what you see right here is overall price has stayed within our range. So if you go back to the February outlook, so not the March outlook, which was last month, it started about here. The February outlook starts somewhere about here. We had already made this big impulse move and already went back to the middle. And the idea at that point was this is such a wide move that impulse sell-off is designed to contain price for the foreseeable future. It's designed to create the edges, the boundaries, the playing field, if you will, for the market to do business. And so if that was going to be the case, we would likely stay inside the middle half of this range, the middle 50%. So if this is the midpoint, 25% up, 25% down, that would be the zone. Look at how price has stayed mostly in that zone in that time. And only recently have we come down here to test this lower edge. I still believe that this LVN is a significant LVN to continue to be defended until proven otherwise. I think below that zone really starts to break market structure, but if we were to drop a little lower down here, it could still be good. So 2500, it could still be a great trap, a failure to hold this pivot low. And where's the primary target? Right there. 2703.75 would be the main primary target, with a shot to go all the way to 28 right there. So that's what I'm looking for here over the next couple of months is over the next week, can we get down here? If so, 2 to 3 weeks later we could be here. 2 to 3 weeks after that we could be up here, right? So that's what I'm looking for here. If price falls below 25 and can't reestablish itself back above 25, 29, then things are broken and market structure suggests much lower. So that's kind of the edge that I'll be looking for big time. But if you look at this on a weekly basis, this is something we focused on in our trading room last week. This is a weekly chart. Each of these bars is 1 week of trading action. You know, here's that kind of that range I just talked about. The key range is trading mostly in the middle. Here was a major stop run week 2 weeks ago. Big high range week downward. Last week price rallied and hit precisely at the midpoint of that week. You see that dot right there? It went to the midpoint and prices above there were rejected and sold off hard. Eventually closed just above the mid. But again, what we talked about last week was that this looks bearish and suggests more downside toward the lower edge. This week we're already starting quite weak, quite weak. And if you look at the NQ, it's kind of the same. This one even more emphatic in its rejection tail last week. You can see that tail right there. It's a big time tail. After a sell off here, this is basically the trade I just mentioned in crude. If you kind of use your imagination and instead of this being a weekly bar, believe it's a daily bar. If crude just sold off, I mentioned just a moment ago, watch for a rejection at this low, because if so, you'll see this thing walk itself right back to the midpoint right there. That's your counter trend fade. But then also notice how bears defend at that level and then sell off to new lows. That's why I mentioned take what the market gives you, get in, get out. Don't get married to that trade, especially if it starts to be wrong, because new lows are likely coming given the 3-week downtrend. Now we might be coming up to a point here in the NQ where we see some rejection and perhaps a bounce opportunity. It's going to be just like the ES. We're looking for that lower edge. So if I bring this up in the daily time frame here, the lower edge that we're looking at is down here below 62.50. You can see this LVN is 61.50. That's basically this low. It's that major breakout point there. You can see that low coincided with the push below the key range low and a rejection back up. This market has traded perfectly off of that impulse range. If you want to study key range dynamics and price action at these levels, the NQ doesn't get much better than that. The impulse high, the sell-off until it reaches that low, and then it bounces back to the midpoint. That gives you 3 important levels, the 2 edges and the mid. And look at this. A failure here gave us the mid. Price takes the mid bid. Here's the mid defended again and then pushes to the edge. Price can't hold above the edge, drops back to the mid, drops below. Here's the mid, becomes resistance on Friday and dropping some more. This is why I like this form of analysis. It's very it's not subjective. It's just it's straightforward. It's universally applied. Once you find that impulse move, everybody has the key levels. And our goal as a trader is to fade the edges. If it's here, we look to fade it. Not if it's down here, it's going to look like it's breaking. But we don't want to follow along in that breakdown, because if we wanted to be short, we should have been short here or here, right? Not down here. So that's why I'm constantly looking to fade. When price was up here and closed right at that line, that Friday, I put out a pre-market report that said, watch out, because if 7,000 gives way, we're headed right here with a shot to go here. So this has been in play. This analysis has been in play for over 2 weeks and continues to play out Very, very nice movement. And again, these impulse moves, look at this right here. Look at this trending behavior since that low right there, which is a 2016 low, and price trends up, up, up. That's a lot of up behavior. And so typically speaking, the market's going to need to pause, rest, digest that recent price action, and just get some folks in here. So this right here is probably only halfway done. Maybe not even halfway. We might not be breaking out of this until September, you know. So we still likely have more sideways action. That's why that impulse move was so large, designed to keep prices in here. Now, that doesn't mean we can't get below it. We can get below it, but it's going to be a great opportunity to buy it back up. Now, the problem is, if this thing were to break down here and then it can't get back above the point, that's when some significant breakdown in structure occurs. Until then, continue to fade that support edge. That 6150 provides the best little spot right there too. If we were to drop into that area, that's a great little spot to watch for a fade back to 6650 and the potential to see a move across the range towards 7K. Here's a little Bitcoin. XBT. This one has gotten beat down big time. There's your initial key range. There's your midpoint. Traded around it here and broke down and went to our 50% target. We were ready for that target like on this day. That day right there, because it was a failed new high, and we're like, yeah, you know what? We might be headed downward pretty soon, and boom. On this rejection day, we mentioned we're headed back toward 10K with a shot to see as high as 12. We got close, right? So you can see this thing is played really nicely off these levels. I'm always trying to spotlight that because it's just so important. And now over here, if we really zoom in, you can see that we have not been able to find a bid for a while. Not at all. And I mentioned before 9K was kind of the last major level that really needed to hold. And when it retested here, it gave off a great looking rejection tail. But what happened was failed range expansion. Price pushed above that high, could not maintain acceptance above that high. And those late buyers got left holding the bag. That rotated this thing back down. Now price hits that midpoint and closes below the midpoint. Those are bad thing number one is a failed new high. Bad thing number two is closing below the mid of a rejection tail. Because that 9 times out of 10 leads to new lows. The next pullback again rejected at 9K and again new lows. And that was all sparked with, again, a failed new high. This high above that high couldn't hold, dropped back down, and that seals and continues this thing lower. So this one has continued to show nothing but weakness. I really don't see much to really like in terms of buying it. It's not showing any great rejection signatures. Like this was good, and I felt good about telling folks we can get as high as 10 to 12. But it takes this action, this kind of increased volatility, that rejection to do something. Right now we haven't seen that. Now what I will say is that we are currently holding completely below the previous month's low and close. The entire day traded below that level. So there is the potential for price to trade below this zone for a few days and build some energy below the previous close and then see a squeeze. So there is a little bit of light at the end of the tunnel for this one if it can start to build some folks in below 60, 980, and then from there perhaps a squeeze could start to go. So again, that's what could happen here, but this one's just been beat down ever since the futures contract came online. This one has been beat. Once the pros came in, I mean, it's been tough. And some of the other cryptos really haven't fared too well right now. But we are at the lower edge of this range. and whenever we reject, or should we reject this low, that could spark a move back up. So what would happen in that case is, if price were to break down below this low right here and then end up closing back above it, that could be kind of a divergence play that leads price back to this edge. And again, your target would be 12K. That would be the best spot on the board if you're a Bitcoin enthusiast. If you want to get in on some of the action, I would say wait for a wipeout of 6K, and then from there, there's the potential to double back to 12. So that's something that could play out. But again, you got to let the market tell you. And right now, that's still kind of a theory right now as we allow it to continue to develop. I will say that the dollar is coiling up for some movement. Watch the dollar. Here's the dollar index. This one has been compressing significantly here. A lot of congestion between 91 and 88.5. We're right at the middle of that range basically. If we break down, I think there's a high odds that we kind of fling back up. If we start to break this thing to the upside above 91s, we might be in a transition phase back up. I'm not sure we're quite there just yet, but just keep an eye on this one because it's coiling up right now. That compression will be what fuels the next 2 to 3 months of expansion. So, it's taken most of Q1 to go sideways. I think the next 3 months will likely be directional once this thing sees expansion. So keep an eye on this one. ZB is one also that's perking up a little bit. This is one that I've kind of stayed away from lately. It's been fantastic according to our levels. Once price broke this range to the downside, we had it forecasted to this target. And we got that move. And ever since then, it's just been sideways in a very tightly compressed range, so I've stayed away in that zone. But now you see some rounded bottom behavior. I mentioned in here that this rounded bottom could start to break to the upside above 145.20. We'll get the party started. And it happened right in here about 3-4 days ago. It broke above 145.20s, now moving higher. I mentioned that I've been cautiously bullish this one in this move, but I've been very bearish it. So I am not very high on this thing rallying too far. I think at the best it could get 150 at the best. And from there, we'll see what happens. I mean, it really has to show some strength because from there, then it has to go across the range again for the most part if it wants to do that. So I think it has a good shot to try and get 150, but again, this one's been one that's been beaten up, so I wouldn't be surprised if some selling pressure comes in after a bounce to an edge like a 150. Alright, I'm going to bounce over to some stocks right now. If you have anything you'd like me to look at, please let me know in the chat. I'll be sure to check it out. Right now there's been lots of selling pressure in the market. I do have some sell candidates here that I'm looking at. This is Humana. Now Humana took a large gap up here today and then threw off a large tail. And you can see a sell signal here. You can see price ran away from the 265, 260 zone, which has kind of some market structure and rallied up. The idea behind this one is that if price, if it opens below today's mid of 83.77 and rallies to that mid and sees rejection and starts to see some rejection in that zone over the next 3 to 5, maybe 5 to 7 days, we could see a fill of the gap. I mean, that could be much quicker as well. But sometimes stocks behave differently after gaps. You don't know if they're going to kind of hold for a moment then go, or if they're just going to start heading out. But I think this one has the potential perhaps to see a day or two, or maybe 3 of sideways, followed by a continuation to fill the gap. And if so, I think this has a good shot to even play to the opposite edge. So as low as 260 on this one. Right now we're trading 280 last, but entry could be as high as say 83, 84. So watching this one here, SBAC has been one that I've been having my eye on. Watch this. If I'm going to bring this up to a 5 period here, let's see, or should we go 10? A little bit of compression. Let's go here. So right here, this is kind of you know, my advanced ADR indicator gives you an idea of compression and expansion. This is color coordinated based on volatility for the most part. For example, anytime you see pink, that's a measure of compression. You see blue, that's a measure of expansion, high volatility. This pink is compression. Anything gray is kind of you know, somewhere in between. For the most part, I use the compression here to help me identify what's coiling up ahead of the next move. Maybe down in this case, since we're trading range. This was a long candidate. So in our trading room, we had this one as a long candidate on this day. And I mentioned above 154.70, we'll squeeze this thing back toward the center of the range and perhaps even as high as the top. And then once it got up here, I mentioned that this could be building out for a move now to return back toward recent lows. So the range is 20 handles. 154, 174 is the range. This one's building out. This doesn't have a classical setup per se, but in terms of value, in terms of what you're looking for, it has everything you'd want. You know, it's at the top end of a trading range. It's near the LV end up here. It's near an area of rejection that's already seen rejection multiple times, and now it's building energy. And so now we have to find a trigger here, some sort of rejection or some sort of midpoint retest, something that, you know, once this thing starts. But just know that this thing could go sideways a little longer before the ultimate move occurs, and sometimes that ultimate move occurs upon a rejection. We could even see a higher high rejection and then start the move. So I'm still keeping an eye on this one, although it doesn't have a classical pattern to it or setup. I think it's got good placement in the chart. And again, this is one we've been watching for some time. The last time we had it here, up. Time before that, we had it here, up. And so you can see how it's continued to do that over and over. Over here, I don't think I called this one here, but a very nice move initially off that zone. But this has a great rejection tail with our perfect midpoint. Over here, this was holding below support and then started to squeeze back above. Both of those are classic entry triggers for what I look for on these rejections. Here's BTU. This one's been coiling up for a long while. This one has rounded off on the top. It's broken through support on the bottom, and now it's holding below that zone. I mentioned to our group here that anytime you break one of these patterns, there's a good shot that you see a major wave of expansion. Classically speaking, if this were to break to the downside, we could see a move as low as 28 over the course of the next 3 to 4 months. Basically, it would mirror this type of move up. 3 months up, 3 months sideways, 3 months down. Now, because the market, generally speaking, maybe not so much over the last 2 months, but generally speaking, because the market has been bullish, because this has been bullish, I mentioned to keep an eye on the potential for a rejection down here. Because if these sellers that are late to the party, below the support level, if they don't get paid, that could trigger a stop run, and now we're headed right back to these highs, and we're going to go 37.5 to 42 in a hurry. And that could even trigger an upside break and continuation. So this one has been coiling up for some time. We finally got outside the range, and this one could be actionable in a number of ways here. This is LBTYA. This is one where we've broken down. Here's a nice markup phase. A great PEMA pullback trade right here with a nice bouncing continuation. Another here. But right here, this is a higher high failure. A big rejection, as a matter of fact. And that thing drops pretty hard. The next pullback here, lower high at the pivot range, drops hard again. Major move now. Now this thing has basically gone sideways for a little while. And today's bar shows a major failed new high in a downtrend. I talk about that all the time. A failed new high in a downtrend is so powerful. that right there could trigger a major wave of downside expansion, given that this thing is compressed for the better part of a month, maybe 6 weeks, and now it's breaking to the downside. We could see, 3 to 6 weeks of trending behavior, at least something similar to this. So in terms of range, this could take you at least down toward 28. Right now we're trading 31, but given this compression right here, we might be even able to push a little past that, say 27, something like that. So this one looks like it has some downside coming up here pretty soon. I want to see what this looks like on a 1 period basis. So fairly average, almost wide, but fairly average. 12.5% greater than average with a failed new high and a downtrending market. Lower value relationship. This looks pretty good for more downside. VIAB. Now I talked about PEMA, pivot-based exponential moving averages. That's what I call them, PEMA. So these are my moving averages, 1, 2, 3, and then there's a gold one here. Pivot-based exponential moving averages. Typically speaking, I have a 21 here, I got a 34 there, I got a 55 here. I also put an 8 here as well. That's kind of my quick average that shows me what's going on, right? When the intensity's increasing significantly one way or another, that type of thing. And these moving averages are very, very powerful, especially when they're stacked and sloped. When they become compressed as well, they can be super, super powerful. So in this case, you can see they were support for a while until right that day right there, where price took out the midpoint of the previous month's price range, and a stop run day ensued with a major sell-off to a new low. Then price bounces up this way. Meanwhile, lower value relationship on the pivot range. That's the pivot range for last month. This is the pivot range for this month. If it's lower, that's bearish. If the close for the month is lower than the upcoming pivot range and the open is below it, the first move into that range is usually offered for a shot at seeing new lows below the previous pivot low. So that's what's happening right now. You can see the retest. I would call this a change of bias. When the bias had been higher, this is a change of bias right here. This is a retest after a change of bias. Additionally, one thing you'll see right here is a failed new high. Another failed new high. You got 3-day lows all near each other. Something to look for tomorrow in Viacom here is if price opens, again, below 31.01, below that midpoint, opens below it. Say it opens at 30.55. It rallies into 31. That's the ideal opportunity to look for an entry, to see initial signs of rejection and entry for a shot at running the downside stops through those lows. That could get you on a fast track to new lows and perhaps even down the way even further. So the primary target zone here, you got a sell signal, you got a lower value relationship, you got a failed new high, you got a rejection above the pivot, the prior closing close, and change of bias, all those things. And now if you use that pivot high right up there, you can forecast between 26.72 and 27.95 as the primary target zone based on average monthly range over the last 10 months. So 32 is a big level. This thing can't get above 32 or the trade breaks, right? And ideally, if price gets above 31s, you want it to start showing rejection right away. Your downside target again becomes somewhere in that area. Let's talk about one thing here. How do you execute this bias now? Right? You have a trade opportunity like this one. What do? You know that everybody can do something differently. I've been enjoying entering lots of these trades using options here lately, and it's been a great way to play these high probability moves based off of something that's happening in the chart. If I think that this is about to happen, I don't have to just sell short, and that's basically my only play. With options, you have so many different ways to engage it. One of my favorite is selling a credit spread, right? So if this is a strong low, you know, and we're rejecting here, and I think we're about to go up, then I'll sell a put credit spread here. Sell the close, buy the far, and then look for it to expire worthless. I collect the entire max profit. Same thing here. Instead of a put credit spread, this would be a call credit spread. So one thing you can look at, you can analyze these trades right here by, you know, which spread do you want to sell? For example, this is your 31 right there. That's your entry. That's the ideal entry. But right now, price is at 30.55. So, you know, you're going to get pricing based off of this. Now remember, when price gets up here, the prices of those options are going to be different. Going to be cheaper for whatever you're looking to get into. So I like to go shopping based off of this price, and then I want to buy it cheaper when it goes on sale at the midpoint, and then get it going, or sell it. You know, if I'm doing a debit spread, then you're buying it cheaper. If you're, you know, selling a credit spread, then you want to be collecting more. So in this case, you'll be collecting more if you're selling a put credit spread as it pulls back. So in this case, if it's sitting here, you know, at 30.55, you know, you could sell the 31 call and buy the 32, and there you go. You know, you want to make sure there's enough open interest, there's enough spread in there, enough credit, and obviously sticking with bigger names, that's usually the case. You could also do a debit spread as well, where, for example, you could sell the at the money 31 when it gets there, or you could go a little bit farther out of the money as well. So for example, you could go, there's 30 right here, and you could buy that one and sell the farther one over here. I think it's, you know, you could, it just depends on the situation. Here's your 31, you could buy the at the money 31 put right here, and then you could sell the 28, and then when price gets here, you collect max on that one. So that's a good way to go as well. So there's various ways you can do it, but I love the way you could structure a strategy so many different ways with options. But here's one thing where this trade will not be good. So I'm using this trade as kind of the poster child for all the others. So if the entry is 31 for a sell-off, I want price to open below that level and go into it tomorrow. If price gaps up tomorrow and at 8:30 Central price is at 31.45 on a gap up, that trade idea is done to me. Done. I'm not working with that anymore, because now if this was rejection, if this is considered rejected prices, what's price doing gapping back above it? That looks more like acceptance now, and that's when you'll start to see a stop run. So if price opens above that mid, I'm not looking at this trade anymore. And as a matter of fact, if it opens above the mid, and especially closes above the mid, that's an opportunity for a stop run in the opposite direction, because you're about to see a major run of those stops, because a lot of folks got short, and now we're about to head here. So just a couple of things. You know, I want it to open below and come into 31s, and then whatever strategy. A ratio spread, you could certainly do that as well. I haven't had much experience with ratio spreads in terms of executing them. I have the definitions down, and I know the strategy, but in terms of executing, I haven't executed much in terms of a ratio spread, at least not lately in this format. I've had automated stuff done before, but in this case, no. I just usually, my primary approach is there's kind of like 4 different levels or 5 different levels of aggressiveness. If I really thought this was going to be bearish, and sometimes I do, sometimes I think that is the low, and we are absolutely headed to X and X price. If it's that aggressive, then buying an in the money option with a delta 70 to me is a great way to be aggressive and directional. If I want to be You know, a put credit spread or a call credit spread, you know, that's a way for me to engage anything and not, you know, be so risky. And then a debit spread any number of ways, and then from there you can do iron condors if you think this thing's going to be range bound. So I try to keep it mostly pretty simple overall, but I know that there's a million different ways you can engage with options, and I have traders that are much better than me with regards to options and all the various things you can do. My real strength is identifying when price is ready to do what, and then just being able to engage that opportunity with any number of those 4 or 5 approaches. So this looks like a pretty good one to continue to watch. We also have, those were all sell candidates. I also have some buy candidates. This was one of them and is still actionable, but I'd be cautious. Again, I'd be cautious. Nice key range here. This is Boeing. Nice rounded top. And then you had the big breakdown through support. That day right there broke down. The midpoint was right where the stops came out, but by the end of the day it closes back above. So what I mentioned to our traders is that's could be day one rejection, and we could start working our way back to 339.42 and maybe even up toward 360. And today price pulled back to 317.39. That's the ideal entry for a move to 339.42, and it played out. The only thing is it closed below its mid, and that's not usually a good deal. And again, the market's starting to look like it's heavy, so I would say keep an eye on 317s. If price can't hold this midpoint, then you're headed to 295 really fast. So we're either 332 or 295. You know, it's all symmetrical right here, all symmetrical off that zone right now. And again, that's why I like these ranges, because once you get outside a range, it's a decision point. You either have to keep going or you're going to fail and you're going to move back to the mid and back across the range. You know, it's just basic price action. And so right now it's at the decision point. It's either got to start making its move or it's going to fail. SPG is one we had a couple of days back. This one also became actionable even as late as today. This one had major support over here, major rejection tail here, and then that next morning just tore off to the upside. Ideal entry is always back at the key level 152, and today it hit it, but again, got to be careful with this one closing below the mid now and heading into the upcoming day. So some of these right now are still kind of building out. If this one can continue to hold 152s, the idea is that you head back toward value, which is 165.68, and it's also the other end of this range. Basically the other end of this range is right here. It's like 68 or so. So that's a nice little spot right there that could be hit. Oh, 165.68. Let's put that. And then let's change the color to that right there. There we go. So if it can hold 152, maybe 150, 165 might be ahead. And again, this would be about a 3 to 4 week trade, 2 to 3 weeks usually, but this one might be a little longer than that. We'll see how that one plays out there. Let's see. We've had VLO. This is Valero Energy. This one's been coiling up significantly. You can see this right here. I call this a PEMA pinch, or a pinching phase, where it's a compression phase. You see all the moving averages in the uptrending phase, they're all stacked and sloped. And then if you look at all the moving averages now, they're not. They're all flat and uncertain and kind of sideways. And then price stays kind of in the middle, 50% of that range. That's what I call a neutral key range. Super energy building phase. Markets go in waves of expansion and compression, and then they'll see expansion again, and then compression. So this one, I think, is on the latter end of its compression phase, and I think it's due for expansion very, very soon. So I'd be keeping an eye on this one. Right now, bulls are defending the 89 strike right now for a shot at some point seeing an upside move. Now, one thing to keep in mind, we have earnings coming up for this one at the end of the month. This one could benefit from a rally into earnings, right? And again, I'm not an earnings player. I don't do that very often, but there are some cases where you tend to see these types of opportunities occur where price will rally into earnings. You know, buy the rumor, sell the news. This could be that type of deal where buying ahead of time, you could see a major break. Now, where do we go if we see expansion? These are the major upside targets that we could see right here, 117 and 108.50. So whenever we are ready to see expansion from this range, boom, first target, perhaps a pullback, and boom, second target, 117. This would take about 2 to 3 months. So some longer term ideas here to kind of chew on. Here's one that's really a short-term opportunity. This is more of a 2 to 3 day, maybe as much as a 3 to 5 day. You see when price, when the market goes directional like this, pull back into this zone between the gold and that blue or that black right there provides a short-term bounce opportunity like that. And again, it could be a 3 to 5 day bounce, something like this. Sometimes it's, you know, just this. Sometimes it's a little bigger. We're in that zone right now. We're in that zone right now. We've pulled back a little bit here in CLR. And this is on the heels of expansion. So if you do something like that, you see this major expansive move up. It hit 60. Then it backed off. Then it threw off this major tail event today. Remember, today was a huge down day. The market's off 3% or so. And this thing has a huge tail and closes above the mid, and it's a bullish rejection. Additionally, these moving averages are starting to alligator mouth open after this compression phase. This usually leads to a nice rally. So where are we headed from here? Let's bring up our average daily range targets. I'll switch these to bull targets. And now from today's low price, from this low, we now can quantify where our best target zone is, and it's between these two green targets. So we're talking 62.52 at the high end and 60.85 on the low end. Now remember, ideal scenario would be for price to open above the mid, come back toward the mid, defend, and then start to work its way up. Sometimes price will just drop in here a little bit more. We'll see how it plays out. But again, this is a 3 to 5, maybe a 5 to 7 day rally toward that target. This thing breaks down below 56 or below a close. So if tomorrow were to close below that mid like this and closes here, again, that's a done deal, likely. So a couple of good opportunities there. This is APA. This one's continued to move on. This is one that we had last week, but could continue to work out on a longer term basis. I'll tell you what I did on this one here. Basically, this one had a great LVN here at 3660, CLVN composite low volume node. It's also kind of below this area of support. You can see price got real compressed here, and then bam, a big squeeze occurred. Let me zoom in on that. So right here, that big squeeze occurred. And again, we can quantify this if we wanted to. I can come over here and I can put a 1 right there. It has to register the 1 for me. 1. I can put a 1 there and it'll quantify that day for me and tell me how big it was compared to average. And so right here, that's a 2-point day. And the average at that point had only been 0.93 points. So it was more than 2 times average. That is a transition day. That's an expansion day. That's a transition day. So the idea was that if we pulled back to 3660 and showed rejection, that would spark a buy opportunity. A couple of days later, we did. We got this day. We dropped way down here. By the end of the day, we closed back up here. Boom, that's your rejection day. So what I mentioned to our group was this is the entry now, is the midpoint. If price pulls back to the midpoint and into 3660, that becomes an entry trigger zone to buy it ahead of the next swing push up. Again, you can be directional. I think in the money 35.5 or something like that was the delta in the money 70 option at the time. And then if price pushes back to this zone, again, this is where you want to trigger. The other thing was what I ended up looking at was selling the 37 and buying the 36 put. So I did a put credit spread, again, selling the 37 and buying the 36. And that'll give you a little bit of leeway. I think the leeway is down to 36.5. This, I did it with 10 days remaining, something like that. I like it, you know, under 15 days left to expiration. 10 to 12 is good. You can even do a little more, but that right there, price just has to close above basically this zone right here, and you get max profit. So it can rally to the moon. I get max profit. It can go, you know, sideways to up, max profit. It can just flatline, max profit. I love that. That's such a great way to do it. Another way would also be a call debit spread. But again, the idea for this one is that the up move takes you to about 41. That's the 2 to 3 week move, is 41s. Well, that's what it was back here. It's already been a week since then, so it might be 2 weeks now to 41s. Followed by a longer push, say 4 to 6 weeks to 45s. That's value. So this thing, as long as it holds above 3660, has a shot to go to 45s. If you look here real quickly, failed new low in an uptrend, that usually leads to more strength. So this one's still looking pretty decent. And again, one of the ones we've been looking at in the room. I found this one very interesting. I don't, you know, I haven't looked at this chart in a while, but this is XHB. This is the S&P Home Builder ETF. Home builders can tend to be a big time barometer of the market at times. 39 right here is a big time key level. You see kind of a large head and shoulder almost looking type of pattern. No real shoulder here, but I mean the market structure is clearly lower and this thing is sold off. But right now you're seeing a push below the previous month's low into the 39 LVN. Prior pivot highs were resistance, becoming support, and there's a minor rejection, not a huge rejection. But is this starting to show rejection? Because you can see last time I rejected here is a pretty decent move back to the midpoint. Are we about to do that again back to the midpoint? That would be a bounce back toward 41. And it could even be a move back, you know, kind of to the upper end of the range, say 42. So I found this one kind of interesting in the placement of where it was. 39s are such a big time level that if it can't hold that, there could be much more weakness to the downside. So again, no real trade idea on this one right now, as I kind of just want to see how it plays out. But again, any one of the approaches I talked about, selling a put credit spread or buying you know, a call debit spread, as this thing returns back to 41, 42, could be in play. But some of the other opportunities have been more actionable so far. This one is BX. This is Blackstone Group. The reason I'm looking at this one is because it has great market structure right here. And this will be one of the last ones we do here. I don't want to hold you too long. I appreciate all of you coming out to hang out today. This key level right here is 31s. You can see the market structure. I like when it was prior resistance, then it transitions, becomes support, failed range expansion. It comes back and sees rejection. 31s is legit. That's a key level. That's a big time key level. That's why we have it marked. And now, are we going to see rejection at that edge? You know, we see a tail at 31. We see a tail below the previous month's low. Price closed above the midpoint, which is good. Not quite in the upper third of the range, which is why we don't have a signal, but not bad. This could be the early signs that a bounce could be seen back toward 34.5, maybe even beyond that if things got really rolling. But I think 35, 34.5 could be a good upside target. Again, if you just duplicate this and move it like that, you got yourself a couple of key levels there with some great responses at those edges. And we're at that edge right now. Again, today may not be ultimately DD low at this portion. You know, we could play down here another couple of days, but overall, this is the portion of the chart that you'd like to buy ahead of a return to value and perhaps a move across the value range from 34.5 to 35. So those are a few opportunities here that I wanted to bring to your attention. Again, anytime the market has a new quarter, a new month and all that, it lines up, it can be a pretty significant day in the market, and that day can lead to more significant price action in the weeks to come. So it's going to be interesting to see how it continues to play out. I'll leave you with this opportunity right here. This is PBF Energy. This one's looking really good in that it also has, let's see, PBF. Bring it up. Just trying to add it over here. So basically, PBF shows a change of bias. Again, you can see kind of a compression phase right here where this thing compressed. You got a breakout right here and it ran. Then here's the big shakeout leg where it dropped down. It hit between the moving averages. This is what I call the trigger zone, is the space between the fast moving average and the next one. And if it rejects that zone, odds favor more strength. You can also see right here that that area was prior highs. Prior highs, breakout point, retest point. You see this right here, that 33, and that midpoint, that creates a little zone. So tomorrow, if price opens above 33.14 and drops into this zone, it could provide a great short-term buying opportunity off the 33s for a shot at reaching this high probability target zone between 35.48 and 36.49. Again, a number of ways to engage an opportunity like that. All depends, you know, on the volume of that contract. For example, the April contract has about 18 days left to expiration, so put credit spread here could be in play. You could sell the 34, for example, and buy the 32, that type of thing, or any combination of something like that as this continues higher. Additionally, you could also be in the money, looking to use that pivot as a low. So again, in the money, delta 70 might be somewhere around 32 or a little lower, and you know, again, that's something that you can piggyback off of, is that low as it moves to the next level up. So this is usually a really good explosive portion of the chart, where after a breakout, the retest can lead to one more great move to that edge. So this is another one to keep an eye on here as we head into the new month of trading. So again, I wanted to say thank you all very much for joining me today. If you go back to pivotboss.com, again, I will be making an announcement on Swing Trade Pro 2.0. You are going to love what's coming out here ahead. It's going to be incredible. Very excited about it. If you want to know about it and be the first to know, you can get on the list by clicking that button. It'll basically take you to a quick form here where you jump on the list. I'll let you know. I haven't even emailed anybody yet. It's not to spam anyone. It's literally for those folks who really want to know about this deal coming out, because it's going to be fantastic. You're really going to want to have this one in your toolkit of education. So that's something that's going to be on the horizon. Also, if you go to the Premium Trading Room, $19 for a 2-week trial. You can also get a hold of my book, Secrets of a Pivot Boss, right here. Secrets of a Pivot Boss. I wrote this book, published it back in 2010, and it continues to be a book that traders love across the world. It has actionable techniques that can be used in all time frames, in all markets, and these techniques continue to work today in these markets. These are the same techniques I continue to use, the same ones I demonstrated today, And the reason why this book continues to have techniques that continue to work is because I modeled a lot of these techniques off of foundational concepts that just work in the market. These are foundational concepts that just have worked in the past and will continue to work in the future. Concepts like compression leading to expansion, right? That's not going to stop happening. And so being able to identify those types of markets and position yourself accordingly is very, very powerful. So you can take a look at the book here, 69 bucks for the paperback or the ebook, and again, a lot of good goodies that come with this as well. So a lot of great candidates here for us to watch. We'll take a look and see how it goes. Again, I want to say thank you all very, very much for joining me this afternoon and taking part of your day to hang out with Pivot Boss and the rest of us, and we'll be back at it again tomorrow. So take care, have fun, and I'll see you all soon.